I am so sorry, but I think that we have used ancient devices, the voice. Yeah. Okay? And so, welcome to the last panel session. That is a conclusive plenary session on the end of accounting, perspectives on the future of corporate reporting and auditing. We have a special guest that is not a guest, as it was a professor of these lands and has been for many years professor in these lands. And is now emeritus professor of business economics or business administration in the University of Messina. And we have the privilege and the honor to have him here. We remember that he was one of the first professor pioneering in sustainability matters and CSR reporting. And that with a great pleasure, I offer you the microphone, I offer him the microphone to tell something about the future and the past, or the future or the past, I don't know, but something on sustainability accounting. Both, the past and the future, according to a professor that has passed through all the Italian academic positions.
Only some consideration, because you cut the time, and so I cut my speech. Thank you, Alessandro, and good afternoon, ladies and gentlemen. This plenary session has a suggestive and provocative title. We are going to hear valuable contributions of the panelists in the round table. My assignment today is to make some reflections on the past and the future of corporate reporting. I am pleased to fulfill this assignment for several reasons, and I hope that my comments will provide food for thought for the upcoming session. First, the history of corporate reporting is strictly linked to the evolution of the firm. But for many centuries, financial statement did not have any roots. The first regulation can be traced back to the Ordonnance du Commerce, enacted in France in 1673. Regulation of the financial statement was introduced in Europe with the Napoleonic Code, then taken up by national legislations. The need to compare the financial performance of companies from different countries has stimulated the adoption of the fourth European Directive. International accounting standards have shifted in the same direction, although assuming the investor perspective as the main, or better to say, the only relevant reporting perspective. A further step was the recognition that accounting data and information both fail to meet the needs of stakeholders. Thus began the period of the social report. In that period, there were no reporting standards. The risk was that companies would give space to celebratory language and to self-referential accountability. Right here in Taormina, in 1997, during an international conference on corporate social responsibility, the study group for social reporting, Gruppo di Studio per il Bilancio Sociale, that I had the honor to chair from this beginning, issued the first Italian standard in the field of social reporting. Today, the reality is totally different. Rules have been settled. Standards exist. Perhaps there are too many, and there are risks of overlapping on leveling off of reporting standards. Standards should be not considered a straitjacket, but a tool to support information that must be contextualized, and the context must be interpreted ethically and historically. The risk we face today is an excess of standardization that is the exact opposite of the one we faced about 25 years ago when we started our route for social reporting standard definition in Italy. First reflection on future of corporate reporting refer to the regulation concerning sustainability information. According to the forthcoming European directive, companies must include information on sustainability in the management report. The obligation does not refer to all companies, but it can be reasonably foreseen that there will be many companies that will voluntarily comply with the new directive. I want to emphasize that the negative denomination of no financial information has been overcome in favor of the concept of financial information on sustainability. Professor Alessandro Lai highlighted this aspect in a recent article. It's not just a lexical aspect, but it reveals an upgrade, a full integration of a multiple dimension of sustainability within the financial reporting system. At the same time, these changes in corporate reporting will impact on business model, process, supply chain, and the levels of value creation. The future of reporting presents several risks, specifically in the short term. Key questions emerge. Are sustainability reporting principles and procedures still valid following the devastating effects of both the pandemic and the Ukrainian war? What are the values and beliefs on which the concept of responsibility in the post-pandemic era is rooted? How many assurances will be requested as mandatory? Does keeping them separate mean giving them a different weight? Does it help the reporting process? Moreover, I see the tendency that dwell too much on the environmental dimension. And now I think it is a new paradigm that requires a specific construction, or it is already explained in the existing business administration theories. Reporting on sustainability has been recognized as a duty, a responsibility which stimulates the adoption of certain behavior. These responsibilities are the counterpart of the role that the community assigns to the firm and of the mandate that stakeholders entrust to companies in a more or less explicit way. As we know, firms are instrumental to people in the achievement of ends assigned to them. Income is a condition of the existence. The economic aspect, however, is no longer sufficient to guarantee sustainability and survival. It is flanked by environmental and social aspects, and like the economic dimension, they to become conditions for survival. Sustainability is therefore linked to the concept of durability, that business administration doctrine is identified as a distinctive feature of firms. Let me underline the pioneering contribution of the Italian economia aziendale doctrine of the last century. I think at this moment Professor Giovanni Ferrero, Egidio Giannessi, Carlo Masini, and also Vittorio Coda with the contribution in the theory of the firm. To conclude, we are really at the end of accounting, as suggested in the title of the disciplinary session. I think the answer is no. I am quite sure that accounting as a discipline presents a good degree of accuracy and maturity. At the same time, it requires abstraction and a renewed language which emphasizes the qualitative dimension of performance. I believe that accounting should be interpreted through the lens of economic studies, semiotic studies. Semiotic studies are the systematic study of science, process, semiosis now, or meaning making. A business semiotics that helps interpret science not only from an administrative point of view, but which also goes beyond mere internal perspectives. Moreover, it deals with the connection between those signs determining a broadening on the subject, methods, and the tools adopted. And my wish is that research in accounting and in management will not be limited to providing a scientific explanation of the observed phenomenon, but will also be able to define concrete solutions. Thank you for listening.
We are so thankful to Professor Francesco Vermiglio because in 10 minutes, just 10 minutes, exactly 10 minutes, he told us the story of the last 20 years, the future, and he suggested a research agenda for future generation and everyone who'd like to make research in this field of research. So it was incredible because in 10 minutes you find everything you should like to have. So thank you very much, and I think that your school is here, and the president of the school, as well as people coming from all over the world, can make you the honor that you deserve. Thank you very much. So I'm very happy that after this presentation, with this research agenda that the Professor Francesco Vermiglio offered us, with the consciousness of the past and the look to the future, we are here to discuss at the end of a very rich conference from yesterday to today with many papers to make the point. So we have listened to many papers, and so we can say, so what? So what about standards? So what about new research perspectives? So we asked to debate this question to people that are engaged in these matters. And the first of these is Professor Feng Gu, who comes from the Buffalo University in the United States, that is very, very famous all around the world for the publication of the famous book in 2016, The End of Accounting. So I give you the microphone, Feng, to explain if it is the end or the beginning of the accounting, as Professor Francesco said. The floor is for you. Thanks so much for being here from so long, from so far.
Thank you. Thank you, Alessandro. First, I'd like to thank the conference organizers, my dear friend Stefano, Daniela, for inviting me to come to this conference and to give me the opportunity to share a few messages with the participants of this wonderful conference. I am going to cover 3 points. So in case I get into some details, I want you to just focus on these 3 key points. First, I'm going to reflect back to the publication of this book, and more importantly, what we learned after the book came out from our interaction with the rest of the world. That's the first part. In the second part, I am going to give you a very quick summary of the research and regulatory efforts that have happened after my book came out. I'm not going to say my book triggered these changes, but I'm going to tell you certainly some of the changes that have taken place are a response to the key message presented in my book. So that's the second point. In the third part of my brief remarks, I will give a brief summary about what we have learned in writing this book, in presenting this book, and in looking at other people's research in terms of the lessons of financial reporting over the last 50 years, basically covering the history of financial accounting standard boards in the US, and more importantly, the implications of these lessons for today's great efforts of expanding corporate reporting to sustainability reporting. So if we forget these lessons, my concern is we're going to keep making the same mistakes, and maybe another 50 years there will be a book titled The End of Sustainability Reporting, something like that. So these are the 3 things I'm going to cover. So first, let me just begin with some reflection of what we have learned during the past 6.5 years after my book came out. So my book came out at the end of June in 2016. Of course, that was pre-pandemic, so everything was normal. For those of you who have not had the opportunity to look at my book, I just want to give you a 1-minute summary of what was covered in the book. So essentially, our book includes 3 parts. In the first part, we identified a problem. What is the problem? The declining relevance of accounting information, earnings, book values, and so on, over a very long period of time, starting from 1950 until I believe it was 2013. That was the end of the central period. So that's the problem, the disappearing relevance of accounting information from investors' perspective. First step. Second step, diagnosis. So after problem, we talk about diagnosis. What is happening? What is causing this dramatic decline in the value relevance of accounting information? So we basically point out with scientific information and very robust empirical tests, there are 2 big reasons behind it. And the first reason is the rise of intangible assets. So we have a chapter in the book, the title of this chapter, I remember, is The Rise of Intangibles and the Fall of Accounting. So, of course, the rise of intangible cannot be controlled by accountants. However, accountants basically ignore the changing world and the implication for accounting reporting. So we basically decided to keep the status quo, and over time, intangibles have taken over, and accounting information has become more and more outdated. That's reason number 1. Reason number 2 is the expanding use of accounting estimates. We all know the problem of estimates. They're subjective, they're not reliable, they can be manipulated. The problem is we have substantially expanded the use of accounting estimates starting from the 80s and then all the way until the present time when we're speaking here. The use of accounting estimate has substantially expanded. We have lots of evidence in our book to support this connection, and we're not the only one documenting this. I'll come back to talk about all the existing research evidence. So that's part 2 of the book, diagnosis. The third part is solution. So how do we propose to solve this problem? So we have basically 3 solutions. Solution number 1, let's treat intangibles as real economic assets on par with tangible assets. Let's report them as real economic assets and then make sure they are part of financial reports. That's proposal 1. Proposal number 2, let's scale back the use of accounting estimates because of the problems people have seen. Okay? So that's an obvious solution. Proposal number 3, let's shift the focus of financial reporting from what we have been doing for centuries to something that investors really want to know more about, which is this concept of strategic resources and consequences. And this basically is a response to Professor Francesca's point that a good reporting model should not be a straitjacket. So this is really a firm-specific, industry-specific approach, going all the way to the most important information that investors care about. How do we know this is what investors need? We read through hundreds of earnings conference call transcripts to find out exactly what investors want to know when they ask questions to the CEOs and CFOs of each public company when these companies present their quarterly earnings reports. We did not just sit in the office and speculated on what investors want to know. No, we went directly to where the actions take place and then find out exactly what investors want to know. So that's really the key message of our book: the problem, the diagnosis, and the solution. After the book came out, we saw lots of reactions. So the question is, did we expect to see as much reactions as actually happened? I think the reaction is actually stronger than we initially thought. We thought, yeah, some people will read the book and then provide some comments. That's all. After a while, people will forget about it, life will go on. Maybe after a year or two, this book will completely disappear. Nobody will buy it, nobody will read it, nobody will discuss it. No, I think the reaction came very, very quickly. I still remember the initial order number on Amazon. So Amazon put out a pre-order weeks before the actual release date of the book, and initially we got something around 3,500 copies. And then after the book was officially released, the number kept going up. More importantly, first we see days and weeks after the book was released, we got very strong media reaction. So the Wall Street Journal commissioned an article to cover this book with lots of details about the key message of the book and some pictures. And then all the major business media provided coverage of this book. And then follow after that, we got a lot of response from, we've seen a few months, lots of response from practitioner-oriented magazines, Journal of Accountancy, Accounting Today, some business publications, all over the world, basically, English-speaking world, as well as Europe. Many of them responded by providing their own opinion, their own response. And then the last part of this process, we saw a response from researchers around the world. Researchers are always cautious. They're often not the first one to offer you any opinion. They want to take time to look at everything. So at the end, when I look at some type of formal response, which can be summarized as a full-length review of a book, I counted about 30 reviews all over the world, mostly in English-speaking countries and regions. If it's not in English, most of the time I cannot recognize. So some of the top academic researchers wrote book reviews in the US and the UK. Some prominent practitioners, some analysts, they also wrote book reviews. So this is really stronger than we expected. And this has been going on for 5 or 6 years. Because also during the pandemic, we saw a couple reviews of our book. So after 5-6 years, people haven't forgotten the book. We're still selling on Amazon, a few copies each week, so people are still buying it. After the initial reaction from English-speaking world, it got the attention from other parts of the world. So our book was subsequently translated into 4 major languages, including Spanish, Chinese, Korean, and Japanese. So we have most of the world covered. That's really something very encouraging to see. Like I just mentioned, we're still selling the book. People haven't forgotten the book. From time to time, we're still getting invitations to present the key message of a book to practitioners. Between my co-author, Book Lab, and myself, we must have made a lot of trips to different places to present our book, sometimes local in New York City, sometimes traveling around the world. In fall of 2018, again before the pandemic, I was invited to give a tour of my book in Australia. So I spent 2 weeks, visiting 4 different cities in Australia. It was during the season of their CPA Congress annual meeting. So they have annual meetings in different cities because Australia and New Zealand is a very large area. It's relatively difficult for people to travel a lot. So they host the meetings with the same agenda, the same group of speakers, plus some local speakers. We rotate the meeting across different cities during the same month. So I was invited there to talk about the message of my book and to interact with people. So until today, we still get invitations. Sometimes the same organization has invited us twice to speak to them. I recently gave an online presentation to the organization Asian CFO Network in Singapore. In 2018, I actually flew to Singapore to present my book to this organization, and now travel is still not as easy, so invited me recently, I think in August, to give them an online presentation. This time, even more people came because it was online, so the advantage of online presentation. Lots of schools and programs have adopted our book as a textbook, so sometimes we got invitations to Zoom into their classroom to interact with our students, so always a pleasant experience. Not too long ago, somebody made our book into a credit-bearing CPE course available in the US and Canada. Without any permission or consent from us, they turned our book into a money-making machine. So it was quite nice to see that, although I'm not sure exactly how the legal process works, so I'm not going to comment on that. To end this first point of what has happened to our book in terms of people's reaction, I want to highlight just one single conversation we had with one of the Big Four firms. So a couple of months after my book came out, I remember it was the end of August in 2016, just 2 months. One day I was working in my office. I received an email from someone I didn't recognize. After I read the email, I realized this was from the managing partner of one of the Big Four firms. So he basically said following the email, he said, "Dear Professor Gu, we have read your book. The entire leadership team of our firm have read your book, and we'd really like to discuss the key message of your book with you. We can come to Buffalo, we can come to New York anytime that works for you. Let's try to find some common dates." So eventually, we settled on, I remember it was Wednesday during the week, so we decided to meet in New York City. On that day, the global audit leader of that Big Four firm flew in from London. He was doing other businesses, but he set aside 3 hours to talk to us. We had lunch together at a restaurant in Manhattan. So we talked about a lot of things covering the book. I remember the most important feedback he gave to us is the following. He said, "We agree with everything you said in the book. We actually have known the problem for quite some time. We know our products are basically useless." By product refers to the financial statements that firm audited for their clients. He said our products are basically useless. We are still in this business because the government gives us an exclusive license. We're at a monopoly. If this were a competitive market, we would have been pushed out of the market a long time ago. So he realized the problem we're talking about, and he asked us to work with them to find some solutions. So that's really the most important part I want to tell you about the reaction. So the second point I am going to briefly talk about is what has come out after our book was published. So here I want to briefly talk about research by others as well as by myself. I want to mention just 2 lines of research. One is research by myself. We have continued to work in this space of documenting the problem we have with accounting. Yesterday morning, I made a presentation of one of my working papers to highlight this problem, the prevalence of firms reporting losses. It's a growing problem, reflects the bias of accounting. We also have other papers that we have published to make sure the message comes across. And then I want to briefly talk about research by others that have come out. So after our book was published, we have seen several research papers documenting more specific issues that are related to the key message of our book, which is the declining relevance of accounting information. One paper essentially confirms that the entire history of the financial accounting standard course in the US didn't produce very useful financial statements. From an investor perspective, on average, most of the standards were value destroying. So they cited two examples, the expensive R&D as well as the expanding use of accounting estimates. So these conclusions largely, correspond with what we find in the book. So we are very glad to see that. In the last part of my remarks, I will just quickly summarize the lessons we have learned from the past 50 years of financial reporting, and then I will talk about the implications. So basically, a lot of people, when they talk about sustainability reporting, understand we seem to assume that we can pretty much follow the footprint of financial reporting, makes this maybe a parallel system at the beginning, and then later on integrate sustainability reporting into the existing framework of financial reporting. I want to provide some caution here because research experience summarized in my book as well as others' book has pretty much pointed out the unsuccessful history of the standard setting in financial reporting. Misguided directions, missed opportunities, and so on. So if we don't learn from these lessons, if we keep doing the same thing, for example, let's expand the usage of estimates, there's no guarantee that our current efforts of working on sustainability reporting is going to lead to successful outcome in the future. So this is really something I hope we're all going to keep in mind when we move on instead of forgetting about it.
Thank you so much. Thank you, Feng. Your contribution is much more relevant and important as you have developed that in the United States. And as you were in the United States, and we all know what had happened in the 80s and the 70s in the United States and also in the accounting research in the United States. So the consideration you have developed in this book are very strong and tough for the United States world. So that's this particular continent and culture. So as we are really a worldwide conference, we are so happy to have invited here Charles Ye, who is a multi-faced scholar, because the origin of his family was the Netherlands 300 years ago, but his family moved to South Africa, and he was born in South Africa, so we have Africa, but he has moved as professor to the University of Auckland, where Fung went to explain his book. In University of Auckland, in one of the most important universities of this continent, is professor of accounting, and there he is also editor of the important Mediterranean Accountancy Research Journal, that is a very important journal right now that has hosted many Italian scholars, thanks for that. And he is also the editor of the Handbook of Integrated Reporting he has published in the 2020. So I would like to ask him to give your opinion about this moment, particular moment we are, to detect where we are going to. Thanks, Chad, to be here.
Thank you very much for the opportunity, Alessandro. It's fantastic for me to be in Italy. It's a great culture, it's a great place, beautiful scenery. I mean, you go out on these terraces and you look out and you see richness in history and culture that we can't even imagine or begin to imagine in the new world where I come from. I grew up, as Alessandro said, in South Africa, and now I live in New Zealand. And we don't have the same confidence in what we are doing. And when you are here, you can understand the confidence. You've been doing this for thousands of years. Of course, you know what you are doing. But of course, for us in New Zealand, we are always thinking, shouldn't we change? Shouldn't we do things differently? And in a way, as an academic, that's where I am as well. I'm not quite sure. I'm always trying to find out what is going on, why are people doing what they are doing. So I have some remarks, but in a way I feel that most of the things I'm going to say have already been said. But I guess I will be bringing my own focus to certain aspects of it. So of course we know that the formation of the company, and that only happened in 1552, as I understand it, in the Netherlands, that meant that owners were absent and managers who were present had to provide information. And this is, to my mind, the birth of accounting and the accounting profession, really, as we know it today. Of course, the managers have an incentive sometimes not to tell exactly the truth, so that, of course, brings into the frame the auditing profession, and we are all part, not all of us, but many of us here in this room are part of the accounting profession in terms of producing the numbers and the financial reports, and also in terms of providing that auditing or assurance function. So that function of corporate reporting is very important because it allows the owners to make good economic decisions. If you can rely on financial reports, on the information in the financial reports, then of course you can allocate your capital to the most efficient place in the economy. And in a way you could say this is the reason why we all of us, benefit from it, because we can live good lives, good income, interesting work, because of this system that allows good information out there. So of course, financial reporting is not perfect. We all know that there are problems, that it's basically a history lesson, and this isn't always what investors want. And what we've been discussing at this conference, of course, is some of the ways to address those shortcomings. And one of the things, one of the mechanisms, of course, that I like quite a bit is integrated reporting. But of course, we know that one of the main promoters of integrated reporting have been hoovered up by other organizations, and we are not 100% sure whether that concept will survive in and of its own, or whether it will die a slow death. But what I am convinced of is that many of the characteristics that are promoted under the banner of integrated reporting will actually survive, because many organizational reports now incorporate some of those characteristics. Actually, I'm running ahead of my slides, so maybe I should just skip a few of these slides by now. Anyway, communicating to investors and communicating to others in society has become a role for corporate reports. It's not just, and this is not about regulation I'm talking about. Managers and companies are doing this on a voluntary basis and have been doing it for a very long time, reporting on social and environmental issues from the perspectives of other stakeholders, because they need to tell their story and correct some of, in their mind, correct some of the misconceptions about what their companies are doing. So this role of reporting has expanded in this way, and therefore corporate reporting, of course, in my opinion as an accountant, is never going to go away. I may be a little bit biased, but no, it can't go away because of all these multiple functions that it is fulfilling in our society. Of course, we know that investors think in terms of risks and opportunities, and those risks and opportunities could also include social and environmental issues. Environmental is easy to understand. When I say environmental, I mean the natural environment. And social, when I say that, I mean various groups within society other than investors, other than financial stakeholders of the company. And two of the biggest groups, of course, are employees and customers. I mean, we kind of expect companies to produce safe products that will not kill their customers. I can give you examples, of course, and you can think of examples of companies who don't do that. They provide products that actually is detrimental to their customers' health. And also, some of them don't treat their employees very well. But anyway, I should stick to the main idea here. And yes, of course, now we've moved towards a multitude of sustainability reporting standards, and it's sometimes a little bit difficult to understand what's going on because everybody's talking about sustainability, but sometimes it's as if they're having a conversation but they don't understand each other. They're talking about different things. So I just want to talk about this, and I know others have mentioned it as well, but this continuum of the purely economic focus on the one side of that slide, and then the broader social focus on the other side. So the purely economic focus in the top left-hand box there, it's about information on the impact of the environment on the firm. And here I mean the environment including society. And then on the right-hand side there, it's about information on the impact of the firm on the environment and on society. That's, to my mind, the broader societal focus. And you'll see there's a tiny box in the middle there that's called the problem of the commons. Now, for those of you who've studied ethics at university, you'll know this as one of the old conundrums in ethics. If there are individuals who make use of shared resources, but the benefits of what they are doing accrue to themselves. And the old example that is used always is a tribe of people who have cows. Cows are their main asset, and they have a certain area where these cows can graze. But of course, if there are too many cows grazing, then the area will deteriorate and will not be able to sustain the cows. But for each individual, it makes sense to have another cow, right? Each individual wants another cow. Doesn't that make you think of companies? The insistence on growth. Every company must grow and must make more every single year, every single quarter. That sort of idea of more is a problem, and means that these two perspectives are not the same. And we somehow need to get to enough. Basta. I don't know if this is possible. So of course here I have who needs the information and where they fit on that continuum that I had before. And then here I have some ideas of how these sustainability reporting standard setters or standard producers fit on that continuum, and I've got a lot of them on the left-hand side, and then I've got the GRI and EFRAG towards the right-hand side, the broader societal focus, and of course the ones on the left are consolidating, which helps us a lot. Somebody's taking a picture.
Thank you very much.
I wish this was already in a paper that we could cite, because citations are is our currency as academics, isn't it? Don't give me a euro, give me a citation.
Okay. I will do for sure.
Thank you so much. I like this picture that was produced by the Value Reporting Foundation that makes sense of, well, this is one view, obviously, of how companies can think about what to disclose. In the bottom left-hand block, the small block, you'll see that it talks about the IASB. So these are the financial reporting standards that we all know from the IFRS. And then in the slightly bigger box, there is the ISSB. That's the new arm of the IFRS, and they will be coming up with the sustainability reporting standards. And then you'll see there's a little thing there that says integrated reporting. You can actually use integrated reporting to put those things together in a meaningful way that makes sense to investors, because this is all investor information. Don't be fooled when the FRS or the ISSB tells you that they are also looking after other stakeholders. They are not able to do that. The IFRS Foundation founding document says it's all about investors. This is not bad. I'm not saying it's bad. I'm just saying it's good to understand that, and it's an important function to look after investors. Investors must be able to rely on financial reports and to be able to properly assess future cash flows and risks associated with it. But anyway, then the bigger light blue, the Azuri there, that's the GRI standards, and that takes a more broader societal view of social and environmental issues. So some companies could use this sort of thinking in their reporting model going into the future. And here's something encouraging that was said by the chair of the IASB and the chair of the ISSB jointly, that they said, and this was in May 2022, integrated reporting drives high quality corporate reporting. We strongly encourage continued use of integrated reporting and integrated thinking. So I'm not sure where this is going to lead, but it's exciting times for researchers because things are changing. And it's good to see, it's good to be able to analyze what's driving these changes and how people are thinking and who is buying into which sort of way of thinking. Of course, if you want to know more about integrated reporting, here is a shameless plug for the Routledge Handbook of Integrated Reporting, which gives many different perspectives, not just a positive view on it, also some critical chapters, some practitioner chapters, some academic research, evidence, etc. And basically, to summarize, you can hear that I'm very positive about corporate reporting. I know it has its problems, but I'm a pragmatist in nature. I believe that we need to take one step at a time to improve on the problems that we foresee. Thank you very much for the opportunity.
For your presentation and the main idea, that is your main idea, that firms seem to have to grow, but it's impossible that all firms grow together. So this is a contradiction. It is a base of a critical analysis of also accounting and reporting, and to have to think about that. We have based our financial reporting on the idea that not just that firms, as Francesco said, has to continue during the time, but they have to grow. But it is impossible that all firms grow together, increase together. This is an issue that we have to think about. And thanks for your presentation. And now we change a bit the program, and we give the word, the speech to Giovanni Cocci and to Maria Lisa Centini. Giovanni Cocci is partner of KPMG here and in Sicily, his partner, and Maria Lisa is manager, but is two-faces woman because she is also a PhD student at the University of Tor Vergata. And so we'd like to ask them what about assurance, because we'd like to have very, very good reporting and very, very good sustainability reporting, but someone has to control it and someone has to assure that all is done perfectly. So the future of assurance in corporate reporting is a team that we assigned to Giovanni and Maria Lisa, and the microphone is for you. Thanks.
Thanks a lot. Presentation. Okay. So thanks a lot to Professoressa that changed the schedule because we have a flight to go to Rome. So thanks a lot for that. So it's a pleasure to be here. First of all, because I am from this little town, which is Taormina, but as many of yours here in the room knows, I studied here in the university in Catania, and then I become a partner in KPMG. Why is a partner of KPMG Sicilian office is speaking about this sustainability? Because, as you know, is an issue that refers to all companies, also small companies in Sicily. The first thing to say is that I have heard here in today a round table, and yesterday round table also, the other one, thanks. Another one. Okay, go ahead. Just this. So the first message that I have heard about is reliability. I have heard this word 2-3 times this afternoon, but also yesterday. And so, what has happened in the market during these years? So, if you can see there is like a moving from the market needs, that is sustainability assurance and sustainability reporting, going hand by hand, year after year. Because the market has asked to all the firms working and doing reporting in the market to have sustainability in some way assured by a third party. And so auditors has got such task. And as you can see, we are not speaking about any mandatory need of assurance. It's the market asked us as auditors and as practitioners to move towards better reliability on such kind of information. Because such kind of information is on the basis not only of investor decisions, but as I had the opportunity to share this idea with some colleagues here yesterday, also to customers' needs. So why is all such sustainability needs coming out? Because it comes from the new generations, the new guys, the new girls, the new people that are facing the way of doing business according to environment, according to government, according to any kind of interaction between companies and the environment as a whole, not only environment as green. So now what's happening? If this was the need coming from the market, the response was different all over the world. So we have the European Union that, as you know, started to have a mandatory feeling that such kind of information must be audited by somebody, because the market is asking that. And this is not just a volunteer approach to have such information audited, but is now mandatory by law. And the evolution of such kind of laws, as you know, has been moving from the directive NFRD to the directive CSRD. And now, in the future, so we will have most companies for 50,000 at the UL level and 7,000 at the Italian level that will be asked not only to produce and provide such kind of information, but also to have such kind of information audited by an audit firm, by a practitioner. And if we have just to focus a little bit on such kind of figures, so we are talking about not only 50,000 companies in Europe, but probably much more because there are group companies. So at group levels, there are many different kind of companies being held by a parent company. But then, if this was the approach, considering the mandatory need of audits, the European Union is not so united. Sorry. Why? Because if you have the opportunity to see such little map, you can see that there are different degrees of assurance that now has been asked by European legislation. So we have some kind of just to say, yes, there is the sustainability report in the financial statement. To the blue ones, you must say if they are reliable. You must say if such kind of information are done according to the appropriate set of rules to produce such kind of information. So the need of rules, and I will say a bundle of clear rules, and the need to have a kind of assurance. But then, what will be the next step? What will be the kind of assurance? So I will leave the floor to Maria Lisa.
So, good evening to everyone. I go shortly on the assurance standard. So, at present, assurance standard is governed by ISE 3000. That is a standard that we use to conduct assurance engagement on sustainability report. Is something that is provides some basic principles, rules, like ethical requirement, acceptance and guidance, quality control, planning and performing. So this standard provides two kinds of different level of assurance: reasonable assurance and limited assurance. Reasonable assurance is something like similar to the financial assurance, so it's something really strong and deep that go under the procedures. Limited assurance is a sort of light assurance. So the basic difference relies on the inquiry, inspection and re-performance, that the reasonable assurance are deep and the limited assurance are at a light level. So also the conclusion that we express are positive in the reasonable assurance and the negative in the limited assurance. So the form is like, we are not aware of any aspect that lead up to that non-financial statement does not comply with the drafting principles adopted. So a brief case study of the Italian regulation. So we know that Italy, France and Spain are the three countries at the European level that adopt the independent requirements by auditor. So usually we do a limited assurance on non-financial information. In some cases, Board of Directors can require also reasonable assurance. That is the case of Enel Group, that is one of the first movers in this issue. So, for example, Enel decided to conduct a limited assurance on non-financial statement and then a reasonable assurance on specific standards, on specific KPIs, which are both social, like we can see the number of fatalities, fatality frequency rates, and environmental KPIs, such as the Scope 1, Scope 2, and Scope 3.
Thanks. So just, we were proud of that, because we are Italians. Sometimes Italy is always at the last, but now we are the first. And it is a very huge company. They decided to move a step forward, and KPMG is proud that was the first one following this need. But then, what will be the future? And now I'm going to finish my presentation. So it's hard to say what will be, but something must be said, that now the need is to have a higher level of quality of such kind of reporting, and the assurance we give the opportunity to the reader of the sustainability report to think that they are well done. And if you just think about the audit report, you know that sometimes it's the last page of the financial statement, but it's the first page that is read by any kind of people that is approaching that kind of financial statement. And what will be the future is that we need, and they say that we need competencies. So we need to move from CFO to CF and NF. So to see financial and not financial officers, even if not is a negative, as we said today, but it's positive to think that people must enhance their competence about the sustainability, and that means that everybody, and we are starting here from Taormina for a little office with KPMG, we must start in having people able to learn, to understand all these issues, and to have people ready to work in a world that is changing in the report And the other need is probably a change in the standards, because there is a high contribution from all standard bodies in changing the principles. And now the aim is to have a step on having a more strong principle on reporting, on auditing, on reporting sustainability reports. And so, as we said yesterday, there is the aim of enhancing the ISA 3000. So, thanks a lot. Hoping that you enjoyed your time here in Taormina, and hoping to have all you again here. Thanks.
Thanks so much, Giovanni and Maria Elisa. So we understand that we have to do research on auditing, in auditing sector, and also to help auditors to know better these matters, this stuff, all these things. So we have to imagine new courses. We have to imagine new courses on sustainability to help auditors to do their job. And I think that this may be a purpose for university as well as for other institutions devoted to prepare persons. So the last, thank you so much for
Sorry,
this.
but we have to leave, sorry. We have to leave. So
Okay, they have to leave because they book a flight and the flight cannot wait for you. So the last intervention is that of Laura Girella, who is not here as just academic from University of Modena Reggio Emilia, but also technical specialist in integrated reporting and connectivity of IFRS Foundation. So we have the great pleasure to have Laura here with us.
Thank you so much, Alessandro, and it is a pleasure to be here. I represent here the IFRS Foundation as well. What I would like to do actually, in the interest of time, I'm not going to use slides, but it is to provide you with an overview of what has been going on from an institutional viewpoint, because there have been quite a lot of changes. Yesterday we had the great and the just all together, from GRI to IFRS Foundation, to EFRAG, the European Commission, all seated together to provide an overview of what's going on from a technical viewpoint to some extent. And this is, as you pointed out, Alessandro, these are all movements that I've been living on my skin, for the good or for the bad. Because I joined the IIRC kind of 8 years ago, and then I moved into the Value Reporting Foundation and now into the IFRS Foundation. And I would like also to finally provide some words of hope, actually, because it is not just about the end of accounting, integrated reporting as a future. And so I think it is also good to conclude the session with some way forward in that respect. So as we all know, we started from a situation where there were a lot of different disconnected organizations. As Jara already showed you, there were a lot of, there was the IRC, there was the TCFD, the SASB, the GRI, the CDSB, all these, alphabet soup, as we used to call it. And then at a certain point, so the aim has been really to consolidate, not for the benefit of the organizations themselves, but most importantly for the benefit of preparers and investors. Because as soon as you could talk with some also Italian companies, large companies, what they could tell you is, we don't really know how we should refer to. Should we do an integrated report? Should we do a GRI? Should we use SASB? What about CDSB? And now the non-financial reporting directive came in. So really it was a kind of a really chaotic situation also from the preparers' viewpoint and also from the investors that were not able to fully understand, as also Frank pointed out, not only how the company has been created value, but also most importantly how it was going to create value in the future. So there have been a lot of passages in the couple of last years. So in June 2020, the International Integrated Reporting Council and SASB, the American Sustainability Accounting Standards Board, which we could refer to as basically the kind of a US correspondent of GRI, decided to merge. So this is the first step in the consolidation. This is because, as some of you already are all aware of, the integrated reporting is a nice framework, but to some extent it is just a framework. This is the way that some people refer to it. It provides a good structure. The ideas are about, as you know, value creation for the investors and other stakeholders. It relies on the 6 capitals, so 6 type of resources. But one of the, to some extent, the pitfalls and the shortcomings of integrated reporting and the framework in particular was that there was no specific reference to the metrics, which are absolutely fundamental for companies and investors to understand exactly the type of resources and how the resources have been leveraged on, and how all these resources have been integrated and have been able to make sure that the companies could continue to create value. So this is basically one of the major reasons for which in June 2020 the IRC and the SASB decided to merge. One of the other particular aspects, and why SASB not GRI, that could be another question that someone could raise, is that SASB, as the IRC, had a primary focus on investors. So both SASB and IRC were aimed to provide information primarily to investors and providers of financial capital. The other positive aspects about SASB is, like, by the way, GRI, they're also providing metrics that are categorized into industry. So also in that respect, it could provide a comparability feature that it is referred to into the framework, but that the framework in itself and in the way it is constructed was not really able to ensure for preparers and users. Then what has been happening then, right after after June 2020, in December 2020, also after a few months, the IFRS Foundation decided to launch a public consultation in order to assess the feeling of the market on whether the IFRS Foundation should play a role or could play a role in the area of sustainability reporting. As we all know, the IFRS Foundation is well known for the IASB, so the accounting standards, but what about sustainability? And what basically we found through this public consultation is that there was a huge support for the market to take a step further, also in terms of consolidation, and especially to make sure that preparers at a global level could rely on sustainability standards that can provide comparable and reliant information on sustainability. So this is why in November 2021, during COP26 in Glasgow, it has been announced the setup of the International Sustainability Standards Board. So basically the idea has been to create, under the premises of the IFRS Foundation, a twin board. So together with the IASB, now there is the ISSB, focusing on sustainability, always with a focus on investor, because as also Chao was pointing out before, this is written in the constitution of the IFRS Foundation, so the focus should be on investors. And to do so, actually, there was the aim not to start from scratch. So basically, the ISSB and the intention of the IFRS Foundation was to take on board and leverage on what the work that was already done by the Climate Sustainability Standards Board and also the IIRC and the SASB that by that time they were already merged into the Value Reporting Foundation. So now what we're going to have in this moment, we have under the IFRS Foundation 2 boards. One is the IASB and the other one is the ISSB. As you know, the ISSB has issued 2 exposure drafts at the end of April this year. One of the general requirements, so basically how actually preparers should provide information on sustainability, and then there is another document that has been issued that is much more related to climate sustainability related financial disclosures. A couple of points and consideration about these 2 documents, especially in relation to to the word sustainability. This is also one of the topics that was discussed about yesterday. Sustainability and the idea within the IFRS Foundation has been not to define what sustainability is about. Because it was felt that basically it is difficult. So the way the IFRS Foundation is thinking about sustainability is really to embrace not only climate. To some extent there are some misconceptions in this moment because there are people thinking that the IFRS Foundation is focusing on climate only. It is climate first, it is not climate only. So the IFRS Foundation and the ISSB will be releasing a request for information next year in order to understand what are the priorities from the market in terms of what the other standards should be. Should we focus on governance, should we focus on biodiversity, social aspect, and so on. So this is one of the key points to take into consideration. So basically no definition of sustainability, but on purpose, because it is difficult to actually understand what falls into the aim and the remit of sustainability. Another couple of points before coming to the conclusion. As in the picture that as Charles showed before, there was, on the one side, TCFD, SASB, IFRS Foundation, and on the other one, EFRAG and GRI. But it is important also in this respect to focus the attention that in any case there are collaborations going on also between the IFRS Foundation and GRI and the IFRS Foundation and EFRAG. Because again, the aim once again is to make sure and to reassure the market, both from a preparer and investor viewpoint, that the intention is not to go backwards. So the idea is not to go back to the situation where there were a lot of acronyms and different places where to put this information and how to disclose information. So in March of this year, the ISSB, so the new Sustainability Standards Board, has signed a memorandum of understanding with GRI, but these are not only words. So there is a plan for the ISSB and GRI to work together, recognizing also the respective remit, because one is the IFRS Foundation focusing on investor, but both the ISSB and GRI as recognizing and acknowledging that both of them are playing actually a really important role, because as we all know, GRI is focusing on a much more multi-stakeholder perspective, but in any case it has been adopted by the largest number of companies around the world, also with respect to SASB and integrated reporting. So this has to be taken into consideration. There is also ongoing work with EFRAG. So again, some words of hope in relation to the fact that the idea is not for the IFRS Foundation to work in a disconnected way with EFRAG, but what we are trying to do is to basically try to align as much as possible what is in the ISSB standards and what is in the respective EFRAG standards, so climate, and the ones relating to cross-cutting standards. About the future and intangibles also. So just to, as I said, reassure, especially Char, but all of you that are working on integrated reporting, we are working on that. I've been seconded to the management commentary team at the IASB before the merger was finished, just to make sure that since the beginning there was the intention to work together between integrated reporting and management commentary. Now I cannot tell what the end game will be, but also bearing in mind that in any case management commentary at the moment is a project that is owned by the IASB only. So probably one of the key points to be addressed will be in the future if the ISSB is also interested in working on this project together, because in any case there were a lot of responses in this respect from the markets in relation to the management commentary exposure draft, work together with the ISSB. And this point was raised also in many other aspects in relation to the agenda consultation that was issued by the IASB last year. So, and this goes specifically to the point of intangibles, because basically what the IASB decided to do, taking into consideration the comments from the agenda consultation, is that there has been the decision to start a project on intangible assets, probably starting from 2024, the first step in that direction could potentially be to review IAS 38, which also the chair of the IASB this morning was telling it is probably one of the oldest standards within all the IASB standards. So there will be the intention, as I said, to work on intangible assets, to review IAS 38. Would it be along together with the IASB? This is not decided at the moment, but also because actually there are issues to better understand actually what is intangible are, how intangibles could be taken into consideration by the IASB and ISSB. So in terms of some points on future research path that I've been drawing, thinking about this presentation, that I think would be useful also from an institutional viewpoint. So the first one could potentially be better understanding the relationship between management commentary, integrated reporting, but also the ISSB as one, because all of them have a lot of things in common. Another one is about thinking intangibles and climate-related risk in this new connected world. So not just only from the perspective from accounting, but trying to understand also the connectivity between the accounting and sustainability. The other one will be around the topic of sustainability. What is sustainability? What does it mean to do and deal with sustainability within the IFRS Foundation, but also at a global level? There is another hot topic, which is connectivity. Again, what are the dimensions of connectivity? There is connectivity from an institutional viewpoint, connectivity in the contents. And then another couple of points. One is always thinking about connectivity, ISSB, EFRAG, and GRI. How could they continue to collaborate from an institutional viewpoint? And last but not least, then what is the purpose of financial statement? Should it remain as it is? Should it change or not? And with that, I'm going to thank you and hand it over to you.
Thank you, very nice presentation, and well, very new, and big news for us, big news. So if I have to reduce to some few words what I learned in this panel, well, I can say try to do it. So the first one I learned is that we are not at the end of accounting, but we are at the beginning of a new accounting. And so there is a lot of stuff to do. And so your shocking book meant that we are in a new era. And in this new era, as you said, Charles, we have to think that perhaps firms cannot increase and grow continuously. And we have to think to another way of thinking in which the world is defined and firms cannot continue to grow. So we have to think about that and to think and rethink to accounting in this way. Then we have to prepare ourselves to be ready for prepare sustainability report and to control sustainability report with assurance. But the shock we have last by Laura is that metrics have to be settled, have to be set, and we have to figure out new metrics. But we have also to figure out new conceptions, because the same word means many things. Sustainability is not a defined conception. And also different institutions, as IFRS, IFRAG, and so on, that seem so far from many points of view, are trying to talk, to find common path and common views and common words. So it's exactly the world in which academics are very, very well, because we can do research, we can do new teaching and many things together. And in this way, I remember that the research agenda has been proposed by our emeritus professor, Professor Francesco Vermiglio, who is, with his long story of teaching and research, told us a new research agenda. Thank you to you all for our presence here, and I give the microphone to the conveners for the last session of this wonderful conference. Thank you very much.
Okay, sounds that's good. So the pain won't be long, just joking. I think first of all we need to thank everybody. but we have two important things to do. And I would like to share this, of course, with Daniela. Daniela, she's been an incredible partner. What is his husband? Her husband, in a good sense, of course, Fabio. Incredible partner of this journey. Thank you very much, Daniela.
Thank you. Thank you for having called me and asked me to offer the opportunity to present this work, this annual conference here in Messina. Messina is in Messina, okay? And the University of Messina has been very happy to keep on board and to work together with this important mission to come again in presence and work and discuss about intangibles, intellectual property and sustainability reporting. And please, just 1 minute, I want to thank and want to applause all the group of the University of Messina, starting from the organizing committee. I want to thank you to the all the others, and to Giovanna and Luisa and Carlo and all of us. Guido, I hope I don't want to miss nobody, but it was a very I have to see also enjoyable work. We have shared the efforts, but also the enthusiasm toward this event. I'm happy to see all these people till this time. Okay? And now I am also happy to have heard by Professor Francesco Bermiglio his agenda for future research, since we are a large group, all of us have had the opportunity to grow up in academic science under his teaching and experience in research. So thank you so much, and give the microphone to Stefano for the following announcement.
Okay, so thank you once again. Of course, we need to thank that gentle lady. You see that one? Hiding away. Thank you very much, Graziella, for all impossible without your help. And of course, I also share this deep thanks to Messina people and University of Messina, Professor Vermiglio, for being with us. We have two final things to do. Yeah. One is this the end of the conference? Yes and no. Just to be on the same page of the last panel. You see already behind us, that professor, Justina Fiatkowska,
yes,
that will introduce to us to the next conference for next year. As you know, it's an annual conference taking place since 2005, about 1 year for COVID, of course, in different European universities. And so we thought that it was a good idea to go, now we are very south, let's go north-east Europe. And we would like to go to, for the 18th Interdisciplinary EIASM Conference, we'd like to go to Poland. So 5 minutes to present the main salient features of this, and after we have the awards. So don't go away, stay with us, sounds like a TV commercial. Okay.
Okay, so good afternoon. And I'm very happy that I can already tell you a few words about the next edition of this conference. So we are talking about 18th as Interdisciplinary Conference on Intangibles. And where are we going? So we are going to Poland, and we are going to meet in Krakow. This is a very beautiful place, I believe, so many of you already confirmed, unofficially, that are going to be there, so I'm really, really happy. Of course, Krakow is one of the most beautiful cities that we have in Poland, and it's also cited as one of the European most beautiful cities. And it's the second largest city in Poland, one of the oldest ones, situated on the south of Poland. And it was the official capital of Poland until 1596.
It has traditionally been one of the leading centers of Polish academic, economic, and cultural, also artistic life. We have already a date, so you can put it on your agenda. It's 21 and 22 of September of next year. So this is already confirmed. You can book your flights and so on. So sign it on your agenda.
Put on your agenda, of course.
We are going to organize it with 3 Polish universities, so this time it's going to be a high energy, synergy, right? Energy also, I believe. So Polish co-organizers are 3 universities. So Wrocław, University of Economic and Business, and we have Dominica, that is there in the last row, that's going to be co-organizer with me. Then,
From
yes, from Breslavia, right?
Breslavia.
Then there's University of Social Sciences from Łódź. This is my university, but we decided to take you to a very nice place. It's Jagiellonian University. So the Jagiellonian University is in Krakow. It's a public research university that was founded in 1364 by our king. And it's the oldest university that we have in Poland, but it's also the 13th place of the oldest universities in continuous operation in the world. So medieval, very nice place to see, and it's regarded as the most prestigious place from the point of view of universities in Poland. Some notable alumni that we have, one of them is a poet, Wisława Szymborska, the poet that got the Nobel Prize 10 years ago. And these 2 others you probably all know, right? Nicholas Pencils and Paul Giovanni, the second, Karol Wojtyła. We are going to be at the management department of Jagiellonian University, so the very modern part of the university. We can offer some good food. We can offer some good weather. That is not exactly the weather that we have here today. It was supposed to rain today, you know, so I had another line and I wanted to show the official forecast, right? So yesterday, the forecast school today was sun and 14 grades in Krakow, and here it was Taormina, rain and storms. Then I had to delete this part, and it was really difficult to compete with the weather and the views and so on, so it's a little bit a big difficult task that we have to organize a conference after Taormina. But at least we have very good connections with the flights. There are more or less 100 low-cost flights and another 100 regular flights with all over the world places, so you will get to Krakow easily. So why not? We're waiting for you, and that's all, so we hope to see you there. Thank you very much.
Thank you very much, and grazie, Christina. Now, there should be the famous sound, the rolling of the drums. We would like to award, together with Daniela and all the senior professors. The way it works, this is intended to award young efforts, young scholars, PhD, assistant professors, efforts. Sometimes there are also co-authors, of course. But this is an award that intends to motivate, to incentivize young people, young scholars, young colleagues. Okay, this is the spirit. Don't take it as the final judgment. Nobody's God here. And so this is the spirit, and we'd like to make sure that we understand the logic of all this. Hope that some of them are still around. Please don't move. Please don't move. In this moment, which is the... So, we thought to create 3 classes, special mentions, so papers that have been striking for some details, for originality, maybe for some elements, and maybe they can still mature. Okay, special mentions, runner-ups for second best sort of ranking, and of course the winners. Okay, so it's a long roll. Okay, it goes along with. So, and I would like to thank, first of all, also on behalf of Daniela, to all the senior professors that helped us in that. So we didn't do anything ourselves. We just collected, the indications by senior colleagues. So, especially young scholars, be careful with people watching you. Really, that's not us doing this. Okay, so let's start with the special mentions. One is, I hope she's still around, Kasha Shruti. Is it? Please. From Uppsala University, please come in. And with a paper entitled Disentangling the Links Between Environmental Risk and Accounting Frameworks Towards an Integrated Perspective of Risk and Sustainability Reporting in the EU Financial Sector. Congratulations. Another special mention, thank you very much and congratulations, of course. Sorry, I had to recover the mic. Another one is a paper by Giulia Piantoni, Arena Marica, Giovanni Azzone, Laura Dell'Agostini. Polytechnic University of Milan. Congratulations. And the title of the paper is Assessing Shared Value in Innovation Ecosystems. A new perspective of scorecard. So scorecard and ecosystems of innovation. So thank you very much. Congratulations, Julia. Have a look there. So. Well done. And the final special mention, Elvira Tiziano La Rocca. Is she around? Can somebody, Maurizio La Rocca and Francesco Fasano. And the title of the paper is Pink CEO Duality, so it's about gender, Pink CEO Duality and Empirical Analysis in Europe. So congratulations on behalf. The first runner-up is the paper by Valeria Schifelliti and Alessandra Patti. Please come in. Join us to the floor. They are both from the University of Messina, I think. But the interesting thing is the effects of the title, Effects of Innovative and Digital Assets on the Business Dynamism in Italy. So, digital assets and business dynamism in Italy, an empirical study. Congratulations. Second runner-up, hope she's still around. She comes from far away. Nelia Titova from Riga. She comes from Riga University of Economics and Business Administration. Probably you remember of her. She's tall, red hair, so difficult to miss. And her paper is Impact of Intellectual Capital Efficiency on Growth Rate and Profitability of a Company. Nasdaq Baltic Case. So I think we thought it was a very good paper, interesting case study, developed in an original way, but especially in a rigorous way. And the winners. Sounds like Oscar, but okay, you say this one.
Gatto Giacomo, Miriam Corrado, Lino Cimprini, Maria Serena Chiucchi, and Andrea Tenucci. The work for the paper, integrating with SDGs in corporate investment evaluation.
Sant'Anna University. Sant'Anna University Pisa. Congratulations to you and all your, especially also to Miriam.
Yes, yes. I want to dedicate it to Miriam.
Thank you very much. And finally?
And finally, we have another winner, Heather Ruen, Thomas Borvueco, Mala Kovutri, and Anthony Lamb. The paper titled Regulated Human Capital Disclosure.
From Harvard Business School.
From the Harvard Business School.
So please, thank you once again to all, and congratulations to all of you.
Thank you.
And of course, we all look forward to seeing you next year. And I have a little secret for you. 2024 is very likely we're going to be in the south of France. Okay? Can't reveal too much, just to create a bit of suspense. But 2024, there's been an offer from southeast of France. Okay? Okay, thank you very much once again for being here. Thanks to University of Messina, University of Ferrara, and OIPR Foundation, the president this year. And thanks to a lot to Daniela and Graziella. See you next year, guys.